Hello traders, welcome back to the channel. In this video, we'll quickly review last week's market performance, analyze the Nifty outlook for next week, discuss key technical support and resistance levels, and examine the latest option chain and FIDI data to understand what the market may be signaling. Let's begin with a quick recap of last week's market action. Nifty declined around 0.50%, falling nearly 122 points to close at 24,252. The key pressure came from elevated crude oil prices, trading around $93 to $94 per barrel, along with rising U.S. Treasury yields near 4.7%. However, strong domestic buying helped Nifty defend the important 24,000 support zone. Sector-wise, utilities, financials and metals outperformed, while auto, IT and FMCG stocks remained under pressure. Interestingly, mid-caps and small-caps showed better resilience during the week. Overall, Nifty remained under pressure, but the 24,000 support continues to be an important level to watch. Now, let's look at the key events and data that could drive Nifty next week. First, the August monthly F&O expiry is scheduled for August 25th. We can expect higher volatility, rollover activity and possible short covering around the 24,300 call wall and the 24,000 to 24,200 put base. Second, keep an eye on global yields and crude oil. Brent crude remains elevated around $93 to $94 per barrel, while U.S. 10-year Treasury yields are near 4.7%. Both remain important headwinds for Indian equities. Third, FII capital flows will be crucial. Elevated U.S. yields and expectations of further rate hikes by the Bank of Japan could impact foreign flows into emerging markets. Finally, markets will closely watch the Jackson Hole Economic Symposium for signals from the Federal Reserve on interest rates and future rate cuts. These factors could play a major role in determining Nifty's direction next week. Let's move to the weekly chart. Nifty is consolidating within a contracting triangle pattern with a descending resistance trendline and a rising support trendline. Nifty closed at 24,250, holding just above the 9-week exponential moving average at 24,220 and the weekly volume weighted average price at 24,210. The recent low near 24,000 was defended, keeping the rising support trendline intact. For the week ahead, the key resistance zone is around 24,400 to 24,500, where the descending trendline is currently placed. A sustained weekly close above this zone could open the path toward 25,000. On the downside, 24,000 to 24,150 is the important support zone. A break below the rising trendline could trigger a deeper correction toward 23,500. Overall, Nifty remains in a consolidation phase, and the next decisive move could come from a breakout or breakdown of this triangle. Let's dive into the option chain for the monthly expiry. Nifty is consolidating within a contracting triangle pattern, with resistance near 24,400 to 24,500 and support around 24,000 to 24,150. Nifty closed at 24,250, holding above the 9-week exponential moving average at 24,220 and weekly volume weighted average price at 24,210. The recent low near 24,000 was defended, keeping the rising support trendline intact. For the week ahead, 24,400 to 24,500 remains the key resistance zone. A sustained weekly close above 24,500 could open the path toward 25,000. On the downside, a break below 24,000 and the rising trendline could trigger a deeper correction toward 23,500. So, the option chain and technical setup both point to 24,000 and 24,500 as the key levels to watch. Let's review participant-wise open interest. Starting with retail traders, they remain highly optimistic, with over 3.07 lakh net long stock futures and a net short put position of around 69.7 thousand contracts, indicating a strong bullish stance. Foreign institutional investors remain bearish or hedged on the indices, with 2.09 lakh net short index futures and 4.67 lakh net long puts. However, they are selectively bullish on individual stock futures, with 6.81 lakh net long contracts. Domestic institutional investors continue to maintain a structural short position of around 41.1 lakh stock futures, primarily as a hedge against their large cash market holdings. Finally, proprietary desks appear slightly bullish to range-bound, with 1.45 lakh net long index calls while also holding 1.85 lakh net long puts as protection. Overall, positioning remains mixed, with retail traders bullish, foreign institutions defensive, and domestic institutions heavily hedged. This video is for educational purposes only and should not be considered investment or trading advice. Please do your own research or consult your financial advisor before making any investment decisions.